Hello everyone, welcome back. So this is our next episode from episode 4. From previous episode we have talked about market structure and how to identify the discount and premium, then how to avoid fake order blocks and non-tradable imbalances. Okay, so here the first thing we need to do is identify black box. Here we have a black 1, 2, 3 overlapped. The next thing is to pull out your Fibonacci retracement, and then after that apply TP2 from the body to the lower part of the lower body. Okay, then after that you put your horizontal line up there, since it broke to the upside, so I'm thinking we'll be visiting buy side. Okay, if it breaks to the downside, then I will be projecting it to the downside, just like this and just like this. Okay, and I will duplicate this one, then put TP2 rising. So that is my target. Okay, for now that's my target. Then after that I will go to the lower time frames. This is the 1 minute, as you can see. So I'll go to the 15 second or maybe the 10 second. This is our black box here, from up there to where is the LTD go? Yeah, this is messed up. So this is messed up. We need to go to the 1 minute again. I messed it up, so it's not right. So as you can see, this is messed up. So we measure it again, just like this. This is right. Now we go to the lower time frames, which is 10 seconds time frame. Okay, so price is just melting away. So this is our black box from down there to up there. So what happened after that? Okay, so we had a swing low. That swing low took this swing high right there. Okay, this swing high, boom. So our range is from up there to down there. Okay, this is our range. So right there we should see some reaction, and we have 2 order blocks here. When you see 2 order blocks, you should see price respect the upper opening price of the first order block. Okay, the first one, even if it is bullish, even if it is bearish order block, you need to see the first one. But as you can see, price, what did it do? It collapsed below that. This is opening price of the first candle, the order block. So we should see some kind of respect, but we don't see it here. Okay, why is that? It is because we are anticipating higher prices. Why? We were bullish, so I measure from up there to down. That is my range. Then OTE is this one, entry. This is the best entry area. This is optimal entry zone. So it should have reacted off of the upper part, not come down here and close. To make things worse, it closed with the body down there. That's not a good idea. That's not a good thing at all. And just disrespect this. Okay, disrespect this. Then we moved up a little bit. Then we completely collapsed and visited this area again. Okay, visited this area again. All right. So what happened? So what happened here? we change direction. Okay, we change direction to what? Bearish. To bearish. Where? Right there, by disrespecting that one, and order flow break. The break of bullish order flow was broken, so downside. So now it's time to look what? Bearish order flow, right? So we have a changing character up there. So this swing low got broken with what? We had this swing high, we made this swing low, then we made this swing again, right? After that we broke this swing high, this swing low, I'm sorry. So this is our range now, our price range. Okay, so we want the price to come up there. Did it? Yes, it did. Come up there, right there, that area right there. Okay, dump it. If you want to wait, you can wait. It broke more, then we came down there. We came down there. All right, when you measure from since we broke structures, since we broke a lot of structure here, price just as you can see just found made a double bottom and then now bouncing off to TP to where it left off. That should not happen. I'm telling you, that should not happen. Almost likely would like to see a drop to the downside. Okay, if you are familiar with the black box types of black box, there are 3 types of black box. Okay, the first, there are 3 or 4 models, I guess. It has been a long time, so I forgot it. So the first model, second model, the third model, and we have the fourth model. Okay, so the fourth model, even though rare, it could happen. It could happen. Okay, it is a double fake out. So fourth model, the third model is a single fake out. The first model is just straight to take profit. There is no pullback, there is nothing. Just like this one, it's just a crazy pump. A crazy pump to the upside. It's just crazy, unbelievable. So anyways, what happens here? It broke. The structure is broken now. Since I have a change in character, I am not going to enter a buy down here. Just because the market dropped to the optimal trade entry, it doesn't mean I'm gonna enter a buy. Why? Because I'm still bearish, and there is no changing character here. Still bearish. Okay. So what happened here? We dropped. We made a gap. We dumped, and now we have a swing low here. And where is our swing high? Our swing high is up there still. So you measure from, oh god, what the hell is happening here? From up there to down there, and you get the optimal trade entry right there. Look at that, dead. Look at how the body stopped there, dead. Let me delete that one. Look at that area. That is crazy. That is unbelievable. Look at that shit. It stopped dead at the optimal trade entry at 61.8 extension. bam. That's your entry right there, dumped. So you add a swing low, as you can see there, and then that swing low was broken, right? But unfortunately there was no trade up. It's okay. It's okay. All I want to see is that swing low being broken. Hard. Hard. I don't want to see price to come up there again. Visit that area. So we dumped. And after that, what happened here? That was our TP down there, our T2. But we didn't even reach that one. When we came down, we made this a swing high here. So we made a swing high where? Right there, that one. That bullish candle and this bullish candle and this bearish candle. That's a swing high. Alright? We made a swing high first here. Then we had a swing low down there. And there too. Right? So the price pumped. Then we made the swing low right here, right? It's a shared one. We broke that swing high. That one. So this low is now significant. This low right here is significant. This one. Let me zoom in on this one. Oh my god, what the hell is this? Let me zoom in on this one. This is a swing low. This high was responsible for breaking of this swing low, right? Then we dump it. After we dump it, we have this swing high. And then we are trying to find the bottom of this swing low until a swing low is formed. This swing low was broken. So what happened? Right there we made a swing low. That's the swing low right there. After that we made a swing high. Then we never broke this swing low, as you can see there. Can you see that? We never broke it. What happened here? What happened here? We made a swing high. We have a swing low and we have a swing high up there too. So we made another swing low, but we didn't break this one. So this we are still inside this range. I finally broke this swing high. So now this swing high and this swing low are what? These are the ones now. These are the ones that I am interested in now. Okay. Swing low to this one. The rest is history. What did price do? It with that swing low, it broke this low. This swing low. What does that mean? It means that it's a strong high. Okay, that is a short-term high. Short-term high, swing high. We made a swing low down there too. We broke that too. So since we broke that, this is our range now. We need price to come up there. Enter OTE. In that OTE, we need to see what? A gap, like a fair value gap or an order block. There is a gap, but that gap was disrespected. That was used as what? An inversion. An inversion. Okay. An inversion fair value gap. What happened next? Price jumped and took this swing high. What does that mean? Now, this is our swing high now. And our swing low is this one. This is responsible for breaking of that. So this is our range now. So we want the price to come down to what? To come down to what? The OTE, optimal trading tree. But that didn't happen. That didn't happen. We left the gap, and that gap was unfilled. It was really discounted. It was really in a deep discount that they had no time but to push price higher and higher and pump it to TP2, which is up there. As you can see that horizontal line. Boom. You get the most out of right there. Boom. Price retraced back. Now it is falling. So you get the top with that TP2. So this is not a good entry here. There is no entry at all, to be honest. There was no entry. There was equal loss and price broke structure, but it didn't give us any OTE. This I can't say it is an order block, but price didn't even visit that one. In a hurry, it was in a hurry, okay? It was in a hurry. So we pumped, and we took the swing high. So our low is down there and our high is up there. We made the swing low, then we broke the swing high right there, right? That means that is our range from down there to up there. So we don't need to come down all the way down there, okay? We don't really need to do that. If we disrespect that one, we will more likely be bearish. And as you can see, optimal trading tree, it even went to a deep discount from down there to up there as a deep discount, and then started pumping to tip it up there, okay? After that, it is not our problem anymore. So let's go to the 1 minute and let's see what happened. I cannot seem to zoom out of this thing. So that was our interest. Black box. I was telling you that we are most likely bearish. Guys, there was a sale up there, dump, and after that, just this is a third model. If you want to know what it is, this is a third model. A single fake out, it faked us out in the downward direction and then moved to the real direction, the upside, okay? So look at that, the TP, that is crazy. The body stopped. It's crazy. Anyways, let's find another black box. So right there we had a sale and we missed it. Right there we had another black box, another first model, 2 candles black box. So this is Brent oil. We can go to WTI and find the black box there. We got one. So it's the same thing. We use our Fibonacci. Price seem to be pressing down, so I'll be projecting the TP to the downside, okay? And I'll use a horizontal line down there, okay? There we go. That's right. That's about right. So let's see what's the lower time frames, like the 15-second, and so our black box is from down there to up there. That is like this. So what do we have here? We need to take a trade here, okay? So our black box, after that what do we had a swing high, then a swing low. Did we make a swing high? I don't. Yeah, we did a swing high. We did make a swing high. Boom. That's the swing high. Then a swing low, and the swing high. Then that swing high. What did it do? Then another swing high, as you can see, but we didn't break nothing. That swing high broke this one. So now we have this and this one as a dealing range. So I'm watching. They are coming to this entry area. I mean optimal trade entry, okay? And we are seeing some reaction here. We are seeing some reaction, as you can see, this optimal trade entry. And I would like to sell that our sale was up sale, number one. So number one sale, the next sale, right? Then there was no entry at all. There was no entry, right? So the optimal trade entry right here from that swing high to that swing low, right? So we will use this and close it in. Then we will bring in, let me zoom in on this one so we can see better here, and use what Fibonacci again for, where was it, from the swing high to this swing low, right? Swing high, okay? So this is optimal trade entry, that is deep premium. They are in a deep premium, right? So it is time that I see a distribution to the downside from up there to down there. As you can see, 50% above we had a gap, and that gap is not getting disrespected because it is getting respected. As you can see, candles come up there and they fall, they come up there and they fall, as you can see, and they couldn't pass this area. As you can see, it's a strong resistance. This is the gap right there that I'm telling you. If they break that, then I'm gonna consider that it is more likely gonna be bullish, okay? It will be used as an inversion fair value gap, this one, okay? Expect this one. As you can see, they are having difficulties. From there to, as you can see, the swing low was broken hard, and our entry right there, our entry. So market should have left this area. This is a very tight spot, and this is not good, right? I can allow some liquidity grab up there like this, taking out these equal highs, but no more than that. So if you are trading with a stop loss, then oh god, what is happening? Why is this saying 12 seconds? I made the expiration 3 minutes. What the hell is going on? Okay, as you can see, this is getting disrespected, right? This thing got disrespected. So what I would like to see is a trade back to here, trade back to this, then I would be a buyer. Boom, that qualifies as a buy. Why? We have what? A void. We have a liquidity void, and I didn't project it to the upside. It is just ridiculous, people. It is ridiculous. We were anticipating a lower price, right? They keep tricking us. We were anticipating a lower price. It was going lower, right? Then all of a sudden, what the hell is this? What the hell is this, bro? Let's go to the 1 minute. It's ridiculous. Anyways, let us zoom out. And This thing, oh god. Yeah, that's right, 2 minutes, that's a good one. So what, oh god, what the hell is it? Okay, let us use this to project to the upside. So our TP will be up there. Horizontal line, and then where is it is up there. That if we are moving up, then that is our end point. That is our end point. Let's go to the lower time frames anyways. 15 second was it? Yes, it was a 15 second. And look at that. It is just crazy. What the hell, bro? What the hell? This is not a sweep at all. This much sweep, it is crazy. So anyways, we did what? Which one was our range? This one and this one, right? We made a swing high. We made a swing low. Then what happened? Price pumped. We didn't break nothing. Then we made another swing high. Then there we didn't break that swing low. Did we? Yes, we did. We did break this one. That is broken. So now we have a swing low here. Then this swing high was broken to the upside. Then what happened? It's just, it's ridiculous, bro. Why is this shit? So this was our range. Or was this one? We didn't break nothing, as you can see. We up and down, finally we broke it right there. So now we have this swing high. And this swing low. Still not broken, okay. It's crazy, the market is going sideways. It is just unbelievable right now. So I was anticipating that a lower move up after that fill, but as you can see, they kept pressing and pressing and pressing, and finally broke it. Broke it and went up. When you see it, so this swing low, then this swing high, another swing low, then another swing high. This swing low was broken right there. So we have this swing high to this swing low. This swing high was broken by this one, so this is important. This one, this is important, right? Look at the volatility. Look at that. Oh my god, mind bending. mind collapsing. So when you go to the 1 minute time frame, the bigger one, you'll see that seconds that was our interest, we were just still in a freaking range. As you can see, this is just a crazy range. This was a range just up and down and up and down, just ridiculous, unbelievable. So on 1 minute we had a swing high, then we had a swing low right there, then we made a swing high, then we took that swing low, which means now this is our range. Okay, so now price just went up. Okay, let me delete that one. So price did what? From there to there. Price made this swing high, came down, made this swing low. The internal structure, okay. So going more than two market structure inside of the higher time frames, then inside that higher time frame there is a lower time frame, and inside that lower time frame trying to divide is just, it is gonna confuse yourself. So two structures is enough. The bigger one, this one, the swing high to the swing low, right? And then the parent, this is the parent, right? The parent, so price pulled back, made a swing high, that is an internal swing high, then broke right down there. This is now external, from up there to down there. This is the parent still. Then price went up and took the internal, right? So you know, this is the parent and just the internal, and no more, okay? Because as you can see, inside of the internal even, you see there is a swing high too. Inside of the internal, okay? So that is just gonna confuse you. So what we're gonna do is, we had this swing, so we need to see this swing and this swing, okay? Enough. Then what happened? Up there price came up and took that swing, right? What does that mean? This means this low, swing low, and this high is now important. These two are now what? Important for us. As you can see. So I want the price to come to the OT, optimal trading tree, down there. Okay? And not worry about these highs and lows, or nobody gives a shit, because it just confused us, okay, earlier, as you have seen it. It confused us. Since this low and this high are still intact, they are still intact. This one is the internal one. The parent one is still here, as you can see. The parent is up there to down there. Price has no interest of moving up there to the parent, but it has an interest playing with the child, as you can see. This is the child market structure. It melted off of there, boom. It's now pressing down to this TP, like profit down there. Okay, even so, the freaking structure, market structure, I mean the shit is not moving. The pair is not moving. I didn't think oil would be like this. Oil was like volatile, it was nasty. But this shit is unbelievable. What the hell is going on here? It's just crazy. So this is what's happening, okay? The parent and the child, that's all. We don't need nothing more. So let's go to the lower time frames, like the 15 seconds, 1/4 of the higher time frame. If you are trading the 1 hour, then you would analyze 15 minutes. Okay, let's go. It is a little bit confusing when you have no idea what the hell I'm talking about, but when you go to the charts and get yourself, get your hands dirty and swim in that river yourself. When you yourself swim in that river with no one's help, but someone is telling you to do that and do this, then you would have a real idea or a real experience, okay? Rather than listening to someone sitting on a couch and listening to someone ramble for hours, and you won't understand it. Listening and doing is different. It's totally different. It's different. So that was a liquidity sweep. As you can see, that was the last time they went up. They ran that, boom, collapsed. Boom, boom, boom. It's just ridiculous. Unbelievable. They are slowly pulling down, coming back down there. Another attempt to move up, but no. Price here. Anyways, let us see what happened here. After that dump there, okay, I'm only analyzing the parent and the child. I don't need nothing more, okay? That swing high, then we dump it. We made another swing high here. We made a swing low there too. Swing low, then swing high, but it is short. We dump it. What does that mean? It means we took this swing low. This swing high is responsible for this swing low, so we use that range. Did price come up there? Yes, that candle came up there and traded down. So we have this. What the hell is going on? Where was I, bro? Where the hell was I? What is this? This is a 15-second time frame. I just don't understand what the hell just happened. Was I looking at the 10 seconds? Maybe. What the fuck happened, bro? Nope, not really. Nope, this is the 5 seconds. What the hell happened? I'll show you. Oh my goodness. Yeah, up there. Wow. Oh my god. That is wrong. I mean, that is not our. Is it? No, it is not. I'm showing you this one. That is the previous one. This is another. So let us go. Where was I? Right there after that. That's swing guy. We dump it. There is no swing guy. So we made the swing low down there. We pump it. Another swing guy. we took the swing low. So we have this range now. So I'm looking at this range and waiting for optimal trade entry. So price came up, that's a sell, boom. Alright. That's a sell. Then what happened? I'm not gonna look at this swing guy, not yet. It's another childish child, grandchild. We don't want that. This is a parent. This is a child swing guy. We broke that swing guy. So this is now our dealing range. Price came up there. We came down, but we didn't break it. Okay. I don't care about this. Price bumped. Broke it. Broke that high. So now our interest is from this swing low to this swing high. I want to see if it wants to respect the optimal trade entry. But price here now. So we dumped. We took the swing low. Now my interest is from up there to down there, okay? Boom. You see, if I had incorporated that one, then it would be a whole mess like this swing low, then this swing low, bam, this swing low, boom, boom. What the hell? So this swing low to this swing high, you apply your OT, then boom, dump it again. Then we took this swing low down there. Is there another swing low? Yes. So it is gonna be from up there to what? Down there. And we made a swing high. We dump it, right? So where is the swing high? This one. Right? We had a swing high before too. This one. After breaking this. So from up there to this. So I'm using the child from up there to this. Then we broke it. Which one broke it? This wing guy, right? So my range is from up there to down there. So look where the price is staying. A price didn't even try to move up. It is inside of this range, as you can see. It went a little bit up, but it is still inside, as you can see. Running towards take profit. Finally hit it. Finally, this was a crazy price range. It's ridiculous. It was unbelievable. Just unbelievable. So this was our range from up there to down there. Pumped, we took that swinger. So our range is from down there to up there. We took that swing low. So our range is from up there to down there. So as you look, that is the swing guy. Boom. We failed. Boom. OTE. We broke it. So our range is from up there to down there. Then we broke it, right? From up there to down there. Okay. From up there to down there, I'm still in the parent. Finally, price broke that, and then we made a swing low, then pumped, took that. So this is our range. So this is our range. When you measure FIP, from purpose here to when you apply this feedback, not this one, and then project it down. You see that the TP is near here, near the take profit, okay, near take profit too. This range is this range. What happened? So this one, so optimal trade entry failed because we are, of course, bearish. We are still bearish. This is supposed to fail. Then we broke. This is gonna be this one to this. Then OTE. This is perfect. It's nice sale. Nice sale. Then we broke that one. Then from up there, swing high. Down there, boom. It is chaotic. It's unbelievable. Okay. Almost 50 minutes. So now I'm not gonna bore you with this. Go check it out yourself for it. So I'll see you in the next one.